Welcome to the Locke in Your Success Options Trading for Income Weekly Update for October 27th, 2014. Before we get going, we would like to remind you that we're not broker-dealers or financial advisors, and we're not making any specific trade recommendations. Also, the risk of loss in trading options can be substantial, so please be aware of all your risks prior to placing any trades. Also, please note that we are using hypothetical computer simulated trades that are believed to be as accurately represented as possible, but actual results and trade execution may vary. Come on over to our website, check out our programs, the M3 Bearish Butterfly, Rock M21 Group Coaching, and Trading Triangle one-on-one coaching programs, and join our mailing list, get your free report, 7 Secrets to Becoming a Successful Trader, and sign up for this free weekly webinar, as well as stay tuned for our current programs currently under development. All right, so back looking at the markets here. Last week we had a topping pattern in the SPX. We had a failure, a confirmation of the topping pattern. We, at that point, we're thinking that the markets were going to continue to be bearish, as that's technically, from a technical standpoint, what should happen. We had one index that was a little out of sync, which was the Dow. At the time, we had this breakdown of the topping pattern of the Dow. However, last Monday we were slightly over that. It wasn't enough to make me overly concerned, but it was certainly enough to raise an eyebrow, saying, hey, maybe this breakdown isn't as strong as it appears. So what we got during the week is that we had a pattern failure. So typically when we get a pattern failure, we get a very strong up move, normally to at least to the highs of the previous pattern. So if that's the case, that's putting the Dow, in other words, I'm looking at a target of the Dow up in the 17.2 area. I'm looking at a target on the SPX back up near 2,000. Looking at the target of the NDX back up near 4,100. And if we come back to the Russell's probably not going to the top. And I'll explain this a little bit more in the Options Tribe update a little bit later. We'll spend a little bit more time on technical analysis, but this is probably going more to the probably 1170 range, maybe 1180 at the most. I wouldn't expect this to come back to 1220 at this point. So, but we'll have to wait and see what happens. So that's what we're thinking in the markets. This does flip stuff a little bit more bullishly, even though the futures are technically down a little bit right now. If we zoom in a little bit on this, it makes sense. If you take a look at the steepness of this pattern, it's very, very steep. And it makes sense that we will consolidate sideways a little bit probably, and maybe even come down a little bit, come into the downside of about this trend line, and then continue higher. Again, probably up into the 1170 range. So that's what I'm thinking as far as market direction and so forth. So let's just kind of skip out and just take a look at the positions. So we entered a lot of December positions last week. We also, I believe, entered a November rock trade last week. Let's go over the November positions first. And the poorest conditioned position we have on is this November V condor. So let's take a look at how this is doing. This actually had one minor adjustment last week. If we take a look at this, I think it was on showing the T-log on the 21st, which I believe was Tuesday. I did sell when the market reversed and it actually broke into its previous range. I sold off one of those 1130 puts that 1030 puts that we bought when the market was coming down, just to start getting a little bit more positive delta, a little bit more theta in the trade, a little bit more negative vega. So if we take a look at the way this position looks now, here's where we sit. We are pushing into the V. If the market continues up, we will sell off this last 1030 put. We'll either widen or completely remove this V. We'll probably take a small loss in the position. There is a possibility the market grinds down further, and I don't think it's a good possibility, but if it is to happen, we may actually be able to make something here. I don't think so. I'm thinking that this thing is just going to be a small loss for the month. But these, like I said, these don't like harsh down moves, and that's what you get sometimes. All right, so let's take a look at our November M3. And we'll just kind of go back to Monday to show you where we were. So on Monday, we were here with our short strikes at 1140. And of course, as the market continued to move up here, we're starting to get our volatility drop. We got up past 10 points past our long strike earlier in the week. We started having positive Vega problems. And that being the case, I believe it was on Tuesday, I took these butterflies and rolled them from 1140 to 1160. So I'll just scoot forward to Tuesday afternoon. We'll let this update, and if you take a look, we are now at the 1160 strikes. We're carrying minus 39 delta, positive theta of 61.27. Vega is minus 40. This is what the position looks like as of the end of the day Tuesday, and there were no further adjustments on this, I don't believe. Let me just check my notes here. No, that was it. So if we come to Friday, this position I think it's doing about the same. I don't know that it's up anymore. Yeah, it's up about $600, which I would call break even. And we're sitting in this position here. Should the market continue to grind up to the 1170 range like we think, it depends on the timing and how fast we react off of that. It's probably going to react. It's probably going to react fairly aggressively off of that level. Probably pull back into the maybe 1120 range. So this is where you want to make your position to make your money. If the market actually, depending on how fast it does that, we'll probably be rolled up close to that point anyway. And of course, we're in fine shape if the market comes down. Our biggest enemy here in the M3 is not the fast move to 1170. The biggest enemy is a slow grinding up from here, which sometimes happen. If that's the case, we should still make something in the trade. It just probably won't be a heck of a lot of money. And that is what we got going on for the M3. If we take a look at a rock entry, so we did do the, let's take a look at the November bearish butterfly first. This actually has had no adjustments. I don't know that this has had, this has had no adjustments since we put the position on. So we started this on the 26th. We experienced a very, very big down move. We never hit a rollback point. Came close, but never hit it, and now we have this big bounce. We're up about $2,200. We are 28 days to expiration. So once we hit 21 days, we're going to go into our expiration guidelines and see if we can get 10% out of this and move on. If the market happens to drop down, it doesn't have to do it a whole lot, but if it happens to drop down, maybe another 15, 20 points towards the end of the week, then we should easily be able to pull our reduced 10% profit target out of this and just kind of move on. So this trade is doing fine, and if we do move to 1170, I think this will be okay as long as it's not too fast. If we get a very, very harsh, fast move to 1170, it's definitely going to draw down. It may or may not be a problem depending on the speed of the move, but in general, I'm thinking it should be fine, especially if I wouldn't be surprised, like I said, the gain we've had is very, very steep, so I wouldn't be surprised if we kind of level off for maybe the week. If that's the case, we may actually be able to take this off towards the end of the week for a reduced profit target number. But that is that's the bearish butterfly. If we take a look at our November rock trade that I entered, this was entered on Wednesday, so I'll go back to Wednesday. So here's what the November rock position looks like. I entered this as an M3. We did the entry tests. The entry test said it is too volatile to be in a regular rock position, which I happen to agree with. I went in with the 1070 shorts. I had to put 5 verticals in here to get my delta down a little bit, and I added a call at the 1000. So that's what we looked like on entry. Nice looking position there. If we take a look at our T-log, this is what it looks like. And if we move forward to Friday, let's see, how are we doing by Friday here? Yeah, so we're still at about break even, not a surprise, right? So still a very nice looking position as of Friday. All right, so moving forward into December, we already had a December V Condor on. So let's quickly look at our December V Condor, which is actually doing okay. I mean, we've just had kind of a grind up so far. Back down to December. Sitting right here, it's down about $800. There's been no adjustments to it. Our delta's running about minus 82, so it's getting near the point of possibly an upside adjustment if we get some continued fast up move early in the week. If it moves up kind of gradually, it'll probably be fine. Drawing down about $1,000 again, which really isn't an issue here. And looking at our T-log, there has been no adjustments since we started. So that's the V Condor there. And we entered a December bearish butterfly on Friday, which I do like this trade this month, especially since we're probably going to top out around the 1170. We should be able to make that kind of range without a problem. And actually maybe even we could be able to get scaled in. Ultimately, what you like here is to get scaled in 2/3. I don't necessarily like to get scaled in 3/3. It makes the position a little too sensitive to chop sometimes. But I do like it scaled in 2/3. And if that were to happen, we could scale in 2/3. We get some of our best months that way. So very good looking bearish butterfly entry. If we take, and like I said, $9 entry, $9.10 with 6.5 delta. That's really, really nice for a butterfly. Position looks like this. We have T-log. I'll just quickly show you that. And that's what we have there. All right, so the last thing we looked at is I told you I was going to enter a 56-day to expiration M3 because we're still doing 56 days. Okay, well, actually, before we get going, we have a quick question on the bearish butterfly. It's, yeah, so if we do this trade here and you think you're going to 1170, you can almost wait. But the thing is, if you do wait, so I mean, let's talk about the normal time, right? So right now we have a control point of 1190. We put the second third on at 1130. We put the last third on at 1150, right? So we will actually be 3/3 entered. If we do that, we'll probably end up even doing a roll. So we'll probably be at 1130, 1150, 1170. The market should back down about 40 points to 1130 and then probably bounce around sideways. So that makes it for a really, really nice trade in December. You do actually get scaled in 3/3, which makes it really nice. Now, if you want to delay that scaling, you certainly can. It helps reduce your drawdowns on the ride to 1170. The problem with delaying the scale-in is that if the market stalls, or if the market pulls back faster than expected, then if you break guidelines and do that, and the market pulls back faster than expected, then you lose out the benefit of getting scaled in. So you never know what the right thing is to do. But if you wanted to put market opinion in this, all right, without market opinion, I just told you what the scaling would be and how it would work out. If you want to put market opinion into this, you certainly could just kind of roll up at. In other words, you can do the roll up first, keep your size down, so you could roll from 1190 to 1110 at your 1130 add point, and then add in at 1150 and add in at 1170. That way your whole position's a little further back, and you draw down a little bit less. So that would be maybe adding opinion in. So there's a couple of things you can do. For my M3, do I reduce my profit target 21 days to expiration? No. I reduce my profit target on the bearish butterfly only. The M3 trade, I mean, a lot of times on the M3 trade, you don't hit your 10% target, And essentially, if I get to the point in the M3 trade where I'm having trouble controlling my T+0 line, I will exit the trade no matter how much I'm up. And the other thing with the M3 trade, though, is if I can manage my T+0 line well over 10%, I'll often do that also. So it kind of helps average things out a little bit. But yeah, my M3, I'm concerned about control. My bearish butterfly, I'm concerned about control too. But the way we deal with it with the M3 is we just always keep our T+0 line flat. With the bearish butterfly, we tend to try to control that by getting out before we get too close to expiration, because the bearish butterfly is a very high gamma trade. So I don't like to be into expiration with that. That being said, you could apply principles from the M3 to the bearish butterfly, flatten your gamma out, and stay in this trade longer and go for more money. But as far as the program goes, and that's what we're doing. We're following the program guidelines. So as far as the program guidelines go, we just get out early. Okay, so hopefully that answers them. I do have a question here. Do I offer an advanced M3 class, or do I teach it in one-on-one coaching? I teach the M3, the more advanced tactics in the M3 in one-on-one coaching and a little bit in our group mentoring class. We are coming out with I'm not sure what it's going to be called. It's going to be an advanced position management series. We might end up calling it an advanced M3, but the reality is it's advanced position management, and it's going to show you how to manipulate your T+0 line like crazy, however you want to put it, and how to do all kinds of things with it. It'd be really cool. All right, so. Looks like the November M3, okay, so it looks like, this is just a comment, looks like the November M3, in the November 3, the market's already above my long put. Will I wait for over minus 100 delta to move the shorts up? No, I don't move the shorts up on delta numbers. I move the shorts up on how far we are past the long strike and if I'm having volatility issues. So usually I'm not going to be, if I'm looking at the question properly, our November M3 is here. If I'm looking at the question properly, I don't technically have a roll-up point for this butterfly until we get over 11, we get a close over 1120 in the market. Even then, sometimes I'll wait a day or two, although I'll get a little bit more active closer to expiration. So we wouldn't even be considering actually rolling the butterfly till then. Now I may roll some shorts out, and usually I'm going to try and keep my delta, especially in an uptrending market, under minus 50 out here. In here I'll let it go to minus 100. Then I gradually, as I get closer to here, cut this to like minus 75, and like minus 50 out around here. So it's near an adjustment point now where I'd be interested in making a minor adjustment. I might make an adjustment because of volatility, right? Actually, right here, I am actually having a positive Vega issue. So I would consider rolling these. Like I said, I'm not flipped out about this, but I would consider rolling these shorts forward if due to a volatility issue, have nothing to do with delta. So we could do that. Okay, so for a small M3, rather than using an IWM hedge, what about buying a deep in the money call credit spread? If you have the course and you want to do a $5,000 M3, there's a section in the course that shows you how to do a $5,000 M3 without IWM. You can use, you can always buy IWM stock too, but one of the ways we do an unhedged M3, which is just so you're not in a butterfly anymore, you're kind of in a broken wing condor. So you can certainly do that with an M3 rather than having a call on. So yeah, there are ways around that, and we really can't go over too much of that here. Yeah, so yeah, if you have the course, yeah, take a look at that. And other comments here is, when do I expect to release the advanced position management course? It's probably going to be in I guess it's February or March, about the same time of year we did the M21 program last year. And yes, positive Delta Vega is another reason to adjust the M3, which is why I'm sitting here, and this is technically due for an adjustment, which it'll get today if the volatility doesn't come down. And have I been traded these methods using futures options? No, I have not. The thing you got to watch with stocks with these methods too, if you're running stocks, you can trade them on stocks, you can trade them on futures options. There's not really a reason you can't do it. You have to see the setup and see what T+0 line is. You have to alter the strikes. You'll have to alter scale-ins if you're doing a bearish butterfly. You have to alter wingless. But you can play with it and do it. The biggest concern with stocks is their value can, and even sometimes oil, the value can like cut in half overnight. And if you get something like that, you're not going to get that in an index. So you're relatively safe to the downside. Realistically, the biggest move we've ever had in the Russell to the downside, 64 points in a day, and a move of that magnitude would be very, very, very rare. That's nothing like a stock going from $120 to $60, right? That would be like cutting in half, or from going, you get a big stock that's 1,000 that goes down to 500 overnight. That's not going to happen in an index, or at least it's never historically happened, and it's very unlikely to happen in the future. Happens all the time in stocks, so you have that risk. So you'd want to trade, like I don't have a problem putting up my full account size into one of these trades if I'm running an index, but if I'm doing a stock, I definitely don't want to do that because we have that risk of taking that big loss. So that's what I think of there. So would I roll the M3 up if it goes past 10 points over the long strike? If it stays 10 points past over the long strike for a day, maybe two, yeah. So the thing with these trades is you're not in a hurry to do anything necessarily. Yeah, I'm a little bit positive Vega, so what? I'm waiting for an opportunity to correct that. If the market's down today and I maintain positive Vega, then yeah, we'll do some sort of a vertical. If the market shoots up a little bit later, over 1120, and it looks like it's going to stay there, then yeah, we'll roll up. And we're only going to roll up about 20 points. We're just going to bring the price maybe to here. So after I rolled up, the price might be like right about here in my tent. So I'm going to put my long strike somewhere, either 1120 or 1130. And I'm not going to, I don't correct it to in the middle of the butterfly. So we do not do that. All right, so that's all the questions we have for now. I was just going to take a quick look at our entry for our December M3 trade. 14 December. I need to delete some of these accounts to make it a little bit easier to find stuff. Let's see. So this is what our entry looked like. So one of the things that we do within the course, right, our volatility is high. If I entered with 10 butterflies, I wouldn't have sufficient delta to put on a call that's around 90, right? I'd be way up in this 70, 78 delta call. So instead of doing that, I keep my $50,000 position size. I use one call, but I'm just going to bump my butterfly size up a little bit. And I bumped this to 14 butterflies. So this is going to be traded with the same delta guidelines, the same planned capital guidelines. Later on in the trade, if we run into capital problems, we'll reduce our butterfly size. But this is what it looks like, right? A nice flat T+0 line, really nice looking M3 trade going in. So our butterfly size is a little bit elevated. And looking at the T-log, this is what we have here. And that is it for the positions, as well as it for, kind of thinking with the markets. So if there's no further questions, I thank you guys for joining me today. And if you get a chance, we're going over our other trade in the options tribe in about 30 minutes. So I hope to see you there, and have a great day, everybody.